concerns of Fed tapering QE impacting gold prices?
Well, look, I think that's been one of the significant influences recently, certainly in terms of the volatility of gold prices, the volatility of currencies, and so on around the world. So a tapering off of QE seems to have already been factored into the gold price. You say people are expecting it. People are expecting some form of tapering, and under those circumstances, I believe it's already factored in. Our view about gold is perfectly clear. In other words, it's got a lot of demand factors on it. It's underwritten in terms of its floor because of the strong physical demand and weak physical supply.
What is your outlook on silver, which seems to be performing better than gold?
Yes, well, silver is also a wonderful precious metal, and it tends to go with gold in terms of price movements and so on, and tends to lag gold somewhat. If gold goes up quickly, then silver will ultimately catch up. People will swap from gold into silver and so on. Of course, silver's got a greater componentry of its demand for industrial purposes, for photography and various other electronics and various other things apart from jewellery, of course. So it's well and truly underwritten by strong physical demand, silver. Supply factors for silver, it's a little bit more abundant in the Earth's surface than gold is, and it tends to come not only with gold, but it also comes with zinc and lead and other minerals. So it tends to be a greater supply of silver certainly than gold. But look, I would say the outlook for silver is almost as good as gold.
And finally, what is your outlook on gold prices with a 2 to 4 year perspective?
Yes, well, we think the outlook for gold in terms of the longer term, if you like, the medium to longer term, 2 years, 5 years, 10 years, is quite strong because the fundamentals are excellent. Gold demand, gold is required for lots and lots of different reasons, whether it's for jewellery, a commodity, a currency, a store of value, it's a hedge, it's all of those things. So the demand factors for gold will continue to remain strong, we believe, for decades, if you like, but certainly for the next several years. It's the supply side that is actually the weakest part of the whole gold equation. New gold, as I say, new discoveries, gold is hard to find. The production of gold has been very flat now for a number of years from the new mines and is not expected to increase. What's happening right now? You're seeing cutbacks in production, you're seeing cutbacks in cost, you're seeing cutbacks in exploration, cutbacks in new expansions, new projects, acquisitions and so on. And all of that will factor in over the next several years into a very flat scenario for the supply of gold. So you've got demand increasing, demand in the ascendancy, and you've got supply very flat. So we believe there's only one thing can happen under those circumstances that's going to put a lot of tension on the price. It will behave in a volatile way, but we think the only way is up.